In today's video, we're gonna go over a bunch of questions, 7 actually to be exact, that are gonna help you answer one overarching question, which is, am I ready to be a homeowner? I'm gonna ask you those 7 questions and I'll provide you some food for thought to help you answer each of them or to help get you further down your journey in order to becoming a homeowner. But let's start off with some introductions. My name is Matt Kelly. I'm a mortgage agent with Mortgage Architects based out of the St. Thomas, London, Ontario area. And if you're thinking that, hey, this guy's gonna tell me to buy a home because he's connected to the real estate industry, I'm gonna stop you right there. Because the reality is I want the same thing for you that I want for all my clients, which is when they're looking to buy a property, that property needs to be and should be a blessing and not something that they feel rushed or pressured into. A lot of people, let's face it, it's a new day, it's a new week, it's a new month, it could be a new year by the time you're watching this video. And with that, a lot of people come with this idea of, look, this is the time when I want to own a home. This is also not a video to bash on renting, because you know what? The reality is renting is a phenomenal option and certainly one worth considering and doing for as long as you can. And so with that, let's get into these 7 questions that'll help you answer the question, am I ready for home ownership? The first question is this: are you familiar with the real estate market in the area you're looking to buy? I kind of always think of those HGTV shows, namely the one that always pops to mind is Love It or List It, where you have this family who has this long, expansive wish list, and there's a certain area they want to buy in, only to find out that they cannot afford or qualify for anything in that area. And there's nothing more damaging early in your housing search to kind of find out that what you're looking for isn't something that's necessarily in the ballpark. So if you're not totally able to answer yes to this question, the solution's not that hard. Really, you're looking to connect with a realtor in the areas you're looking to buy in, in the meantime, until you find that perfect realtor for you, you can hop on like a site like realtor.ca and kind of get yourself familiar with the market. Now, the second question, kind of the remaining questions are all related to kind of the pre-approval process, which is one of the most important steps and one of the earliest steps you should look at on your home ownership journey. So the first question in those kind of series, second question overall, is this: do you know how much you can afford to spend on a home? Now, determining how much you can afford to spend, note I said afford and not qualify, because those are 2 very different things. When you figure out how much you can qualify for a home after a pre-approval, it is what is the max mortgage you can be approved for. Now, there are a number of online tools from banks that lenders offer, insurers offer, which give you a theoretical max as to the maximum mortgage that you can be approved for. But in order to actually answer this question, what is the most that I can afford to spend, you're going to want to get a pre-approval, and you're going to want to kind of think almost from a personal finance standpoint and look at some budgeting. I know there's something that I offer all my clients, which is kind of a hybrid system of, hey, this is the most you can get pre-approved for, but here's a good budget with some guidelines for you to fall into. But that's the second question. Do you know how much you can afford to spend on a home? Now, when we look at a pre-approval, there's kind of 3 things that are major factors here. And so these remaining questions are going to kind of go into those things, the 3-legged stool of the financing formula, as I like to think of it. So the first one is this. And this is the next question: do you have the down payment saved? With the major insurers in Canada, and those are CMHC, SAG, and Canada Guarantee, you can get into a home for as little as 5% down. Now, there's a couple of caveats here, which I'll stop briefly on. You can get in for as low as 5% down, assuming A, you're going to live there, and B, that the purchase price is under $500,000. But one of the things that is also important to remember is that anytime you're putting down less than 20% of the purchase price on a home, your mortgage is going to require mortgage insurance. These are what's called high ratio mortgages. If you're looking around online and you see any reference to high ratio, basically what that means is that the borrowers in this case have put down less than 20%. So that's the answer to, do you have your down payment saved? You're probably asking yourself, well, how much do I need? Depending on the parameters and kind of what you're looking for, what's affordable for you, you could get down or could get into a home with as little as 5% down. The next stool of the, kind of that financing formula is around income. And so the question is, do you have a regular income source? Whether that be that you're a salaried employee or an hourly employee or self-employed. All of those kind of individuals can absolutely get mortgages. And this is another thing that's kind of important when you're thinking about your affordability, is that you kind of want to base it on some conservative estimates. And so what lenders are typically looking for here in regards to income is at least 2 years of history that's consistent, because they want to make sure obviously that you can always make your mortgage payments. And what's kind of important to note out here is that if you're an hourly or a salary employee, it doesn't necessarily, you don't have to necessarily be at the same job for 2 years. You just need to, definitely stay within the same industry and have a good reason as to why you're making the change. So the last leg of that stool is around credit, right? So the first leg was down payment. The second one was income. The third one is credit. So question 5 is, do you have credit history, or a long enough credit history, I guess, if you want to think about it this way. And so when you look at the last 2 years, lenders are looking for at least 2 years of credit history on 2 different, what they call credit lines. So a credit line is something like a credit card, like a personal loan, whether that's like OSAP or not, a line of credit, those types of things. And the reason why credit history is so important to lenders is because lenders look at your past credit, your credit history, your past credit, as a way of determining if you're going to be a reliable borrower going forward. So if you don't have, these 2 lines of credits, consider getting, let's say, a credit card and establishing good credit by putting little purchases on it each month and paying off the balance in full. Question 6, also around credit. Do you have a healthy credit score? As I kind of alluded to in the last question, poor credit makes it harder to get a mortgage approval. In order to get a good credit score, or improving your credit score, consider kind of these 3 points. So if you can't pay off your balance in full, you need to make sure that you're always making your monthly minimum payments on time. Also important is keeping your credit utilization under 35%. So if you have a credit card that has a balance of, let's say, $1,000, it means that your balance, or kind of the revolving balance, so to speak, is always under $350. Now, if you're an individual, this is kind of the third point here, if you're an individual that has some bruised credit history, like a bankruptcy or a consumer proposal, then apply for a secured credit card to help reestablish that pattern of responsible borrowing. The last question is this: have you got a handle on your consumer debt? Debt is something, let's face it, that a lot of us have. And it does impact your ability to qualify for a mortgage, right? The more that you have going out, the tougher that it is to make ends meet and to meet all your financial requirements, including your mortgage. A high debt load, therefore, can hinder your ability to meet all your financial obligations. And so when you look at your monthly debt repayments on your home ownership journey, so that's considering stuff like your housing costs, your car loans, your credit cards, lines of credits, any personal loans, and you add those all up, that percentage should not exceed 40% of your household's gross income. Now, if you're carrying more than that percentage, what's important here is that you need to aggressively pay down your debt. So that way, when you are set up for, that way you're set up for success when you start your home ownership journey. Now, if you answered yes to all 7 questions, then we can pretty confidently say that, you know, you're well on the path to home ownership. If you weren't able to answer yes to all the questions, it doesn't mean that you're not ready to be a homeowner. It just means that you're a little bit further on the path, and that you should connect with a mortgage professional so that way they can help you out and assess kind of what you need to do to get further out. Because we have professionals in our network that can ultimately help you with whatever part of this you need help with. So hopefully you found today's video useful. If you did, comment below with any questions or any feedback on the video. We're really early into putting these out, so any feedback is always appreciated. And if you found a video like this helpful, then consider subscribing, share it with a friend, and we'll be back with more kind of these contents, kind of revealing some things about the real estate industry, especially obviously as it relates to mortgages. So thanks for tuning in today, guys. Have a great day. Talk again soon.